Hello Mavericks, this is Emery and welcome to today's currency recap. So today we'll be doing, as usual, a review of the trading day. We'll be going over any meaningful news, taking a look at the major markets including equities, currencies, and commodities. We'll then do some technical analysis on some of the most important price charts, such as the S&P 500. We're going to then look at our proprietary currency baskets for some analysis, look at any major news events that might cap off the week, and then wrap things up by looking at some potential opportunities. Let's get into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of profits generated. So if you are a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video. Now let's break down today's market action. Starting things off with some market analysis. So the major news for the day is that Canadian and US GDP readings were stronger than expected. In fact, all the economic data today for the US came in hot. So consumer sentiment came in hot. The labor market shows no signs of cooling down. It's going to be very interesting to see what kind of data the Fed is looking at to justify their, the three rate cuts that they're projecting. I personally don't see it, and it'll be fascinating to see what happens if the Fed disappoints on that promise. But in any event, let's keep things rolling on for now. So the stock market largely flat today, but crypto, gold, and oil all did well. The S&P held a little bit above water, and total world stock index was virtually flat on the day. We're looking at our fiat currencies, the Swissy with a bit of a rebound. Same with the loonie. The dollar also did well. The yen and the pound and the Kiwi dollar also kept their heads above water. The biggest loser of the day, however, was the euro, followed by the Aussie dollar. And over in the land of cryptos, Bitcoin Cash and Litecoin did well, but Bitcoin and Ethereum down on the day. So taking a look at our chart here of the S&P 500, we're still maintaining a +3 rating. There's not much more to add here than pretty much every update we've had this year. The market's still above both moving averages, and the slope of those moving averages remains positive. Taking a look here at the economic calendar, so tomorrow we have some core PCE price info coming out and some comments from Fed Chair Powell as well. Just keep in mind that tomorrow is Good Friday. Okay, so moving things on now to some currency analysis. So taking a look here at our velocity scores, I really like seeing the dollar and the Canadian dollar in the +2 column. The yen being at a +2 is a little bit flattering, as you'll see as we go through the currency baskets. The Kiwi dollar and the euro at a -3, the Aussie at a -1, the pound at a 0, and the Swissy at a respectable +1. So we're going to take a look now at TradingView to see exactly. We're going to kick things off with the Japanese yen. So you can see here the yen has staged a rally. It looks like a fairly tame rally thus far. Looking at today's daily candle, not a very strong close, especially after the yen was up big on the day. If we're looking at some fib levels, you can see that we've retraced or given back 50% of the decline so far. So we're coming into that kind of territory where you would expect some sellers to start stepping back in. Let's see if we can drop some time frames here and just see if we can identify some clearer parameters here in terms of where we might look for potential sellers in the yen to emerge. I'd be looking at this bit of order flow right here in the basket. So we're not too far away from that. If we tap into that zone, I think it's pretty likely that we're going to see some selling pressure step back in. So that's definitely something to keep an eye on. Taking a look at the dollar basket. So we've cleared the last major swing high from Valentine's Day, and we're currently above it. However, I do believe the air is probably starting to get a little thin up here for the dollar, especially the deeper and deeper we trade back towards where we were in late 2023, October and November. So there could be some selling pressure a little bit higher up in the dollar, but I think broadly speaking, the dollar still has some runway to go before this run exhausts itself. So I'm looking primarily still to play the dollar on pullbacks. Looking at the Swissy, we tapped into this demand region and we had a nice bullish day today. I think it's still very premature to consider buying the Swiss franc, but we're in the right zone to be doing so. So if a clear pullback emerges, say on a 1-hour chart or a 15-minute chart, that's possibly a sign that we could look to buy some Swissy, provided that there's another currency that's extremely relatively weak. Just be cautious with being long the Swissy because we have seen some extended selling pressure since the end of last year, the beginning of this year. So such a trade would at least be counter to the prevailing trend of the year so far. Next up is the euro. So we've tapped into this resistance area. A lot of overhead supply here in the euro. I'm expecting significant euro weakness over the coming weeks. Okay, the pound, similarly to the euro, we've tapped into a supply region, but whether or not this results in a prolonged period of weakness remains to be seen. I don't think it will. I think we will probably get a bit of a pullback, probably closer to where we were trading in middle February, but nothing too significant. I'm not as interested in the pound. The loonie, however, has surprised me considerably. So we've broken above this significant low, which has invalidated this rising wedge, and we now have to look at what else could possibly be going on. Well, I think the pressure is now on for Canadian dollar bulls. I think the next obvious target, if you are bullish, is to go back to the highs from October 13th. All right, so the Aussie dollar kind of just stalled out. We got this nice break out of this inverse head and shoulders, tapped into the supply region, and now we're just trading largely sideways. I mean, yes, we're ratcheting lower, but it's not in a particularly vicious manner. So I'd say wait and see mode for the Aussie. The Kiwi dollar, however, has neglected to follow through from finding buyers at the bottom of this potential range and instead broke out the bottom. So that now puts these lows into focus. So these lows are from the end of October 2023 and the end of, middle of August of 2023 as well. So keep an eye out for that. But I really like the idea of playing some New Zealand dollar weakness here. And that wraps things up with our currency baskets. So in conclusion, folks, just always make sure you're looking to pair up those relatively strong currencies versus the relatively weak ones. Make sure to pay proper attention to position sizing and follow the trading plan. All right, so it's been a very interesting trading week so far. It remains to be seen what's going to happen as we head into April now. And don't forget, tomorrow is Good Friday, so the markets are going to be closed in observation of the holiday. So just keep in mind, that stock and bond trading will resume on Monday, the day after Easter. But of course, FX, FX is going to trade, and crypto is going to trade, but the volatility in those markets is going to be probably a little low, and it's going to be very thin trading. So my suggestion, traders, is to take tomorrow off and hit the charts again next week. All right, thanks for watching. See you soon.